errors, we have A, we have 0.257, we have 0.225, and then they have given us the T ratio. T ratios, what we have there for the T ratios? The T ratios, we have 0.34, we have 2.42, and then lastly, we have 2.61. So out of these T ratios, a good student, ladies and gentlemen, will be able to get these missing values because we know the formula. We know that T ratio, should be equal to the coefficient over the standard error. The coefficient over the standard error. 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 So, ladies and gentlemen, look at in this case here for the constant. Look at the constant. Let us evaluate the constant first of all. So, for the constant here, they have given me its T ratio. It is 0.34. Its T ratio is 0.34, which will be equal to the coefficient here. The coefficient is 0.983 all over the standard error, which is for the constant, which is A. So that your work this morning will be to make A the subject of the formula. Your work this morning will be to make A the subject of the formula. Your work this morning will be to make A the subject of the formula. 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 So if you try making A the subject of the formula, then this will be 0.34A equals 0.983, implying that A will be 0.983 divided by 0.34, which will be equal to what in terms of 2 decimal places? I'm being given a figure of 2.89 by Edith. 2.89. Edith gives me 2.89 there. 2.89. So that is it. We've been able to evaluate the constant. So straight away now, we go to the second variable, which is what here? Which is x1. The second variable, which is x1. The second variable, that is what here? That is x1. The second variable, that is x1. So if you allow me, I'll come and delete this. So we have here variable x1. So variable x1, I can see something missing. So for variable x1, ladies and gentlemen, what do we have? We have here our usual formula that our T ratio will be equal to. We have our formula usual, its coefficient divided by the corresponding standard what here? The corresponding standard error. So for variable x1, the T ratio is 2.42. The T ratio is 2.42. So then these 2.42, ladies and gentlemen, the 2.42 will be equal to the coefficient that we don't know, which is B, all over the corresponding standard error, which is 0.257. Therefore, B will be equal to 2.42 times 0.257, which will end up giving us what figure in terms of 2 decimal places. In terms of 2 decimal places, somebody called Francisca. She's able to give me 0.62. Thank you and thank you very much. 0.62. Thank you and thank you very much. Now we don't have anything for x2. Now we go to the next table. Let's go to the next table. The next table given in this question, ladies and gentlemen, is the famous ANOVA table. They've given me ANOVA table. ANOVA table is the same as what here? ANOVA table stands for analysis of variances. ANOVA table stands for analysis of what here? Variance. So we have here the ANOVA table. So under ANOVA table, of course, I'll be interested in the sources. Under the ANOVA table, I will be interested in the sources here. I will be interested in the sources of my variances, types of variances. There are normally two. We have what we call regression, and then we have the error term, the ones which can't be explained. Remember, regression is what we are able to explain. Regression is what we are able to explain. Regression is what we are able to explain. These are also known as explained. They are also known as explained variances. These are unexplained. These are unexplained like that. So, ladies and gentlemen, we have here from our yesterday's question, they have given us the DOF. The DOF is degrees of what here? Freedom. DOF is the degrees of freedom. So we have here DOF, here we have 2, here we have 11, here we have 13 if you add, that is total. Total is 13. Total is 13. Total is 13. Now, ladies and gentlemen, go to the next column. The next column is called the SS. The next column is called the SS. Yeah, you can try sending this handout in our WhatsApp group. There is somebody who is in need there, who wants this handout. Please send there. They would have done that, but I can't multitask. That one is not an easy thing for a man. For a gentleman, it becomes very hard to do so many tasks at the same time. So they have given us a sum of squares. Sum of squares, ladies and gentlemen, what we have here. I can see 29. 0.4.8, 0.8, and then here I have 100.1. So you see, they want you to evaluate C. This is quite a good examiner. C is the total of the two. C is the total. You add. Can somebody add for us there? Somebody add for us there. Give us the total of these two. What do we have? Somebody there. Total of the two. You add. What do we have there? So somebody called here, John, gives us 3,004.9. 3,004.9. 3,004.9. Now, ladies and gentlemen, after that, of course, I will go to the next thing. The next column they want you to get is called the mean sum of squares. The next column is called the mean sum of squares. So what shall we do for us to get the mean sum of squares? Mean sum of squares is an easy thing to get. You should take this, you divide by this. So to get mean sum of squares, we normally take sum of squares divided by DOF. Sum of squares divided by DOF like that. Sum of squares divided by DOF. Mary wants to know the question now. We are doing this question that we got from this handout which we were working on yesterday. The handout we were working on yesterday. Somebody can throw it straight out to our WhatsApp group. So we have here mean sum of squares. It is sum of squares here divided by degrees of freedom. So you take like this 2904.8 divided by the corresponding. So somebody give me this mean sum of squares. The first one, which is D, which is missing, will be 2904.8 divided by 2, which gives us what figure? So D equals, I'm waiting for your figures. I'm being given a figure here by John again, 1452. 1452.4. And then I have in this case here, of course, I can just try for purpose of knowledge. I can take this divided by 11. So 100 divided by 100.1 divided by 11. 100.1 divided by 11 will give me 9. What here? Will give me 9.1 like that. Will give me 9.1. Will give me 9.1. Will give me 9.1. And then lastly, I'm so sure so many of us have forgotten the formula for getting F. Let me see. Who is able to remember the formula for getting F and hence evaluate for us the answer for F? Evaluate for us the answer for F. Evaluate the answer for us. What is the answer of F? Somebody talk to us. What is the answer of F? So if you can recall, ladies and gentlemen, to get this F ratio, which is the same as F calculated, we we normally take what we call the mean, the explained MSS all over the unexplained MSS. So the explained MSS, the explained mean sum of squares, we have 1452.4. All over the unexplained MSS, which are what here 9.1. So what figure are we able to get there somebody? I'm being given a figure of 159.6. 159.6. 159.6. And that is it. That is it. So from ladies and gentlemen, please take us straight away to Roman 2 of this question. Take us straight away to Roman 2 of this question, where they want us to give them the estimated regression model. They want us to give them the estimated regression model. They want us to give them the estimated regression model. So estimated regression model really, that is not mine. Estimated regression model is your. This person, ladies and gentlemen, has known that generally this is how regressions look like. Our regression models normally look like this: y equals a plus bx. But because this is a multiple regression model, this will be y equals a plus b1 x1 plus b2 what here somebody x2 like that. Because we've got two predictor variables. We have two predictor variables. We have two predictor variables, x1 and x2. x1 and x2, x1 and x2. Now, ladies and gentlemen, listen and listen to me very well. If you look at the first table is the one that has got parameters. The first table is the one that has got parameters. The first table is the one that has got parameters. These parameters. So the parameters first table, we have the constant, we have parameter for x1 and the parameter for x2. So the constant parameter is 0.983. x1 parameter is 0.62. x1 parameter is 0.62, and then we have the x2 parameter, which is 0.587. So these are the parameters, the regression parameters. So our y here will be equal to a that we have here 0.983 plus b1, which is 0.62 x1. So having been given a parameter. So plus b2 is 0.587 x what here x2, and then you double on the line. You get all the marks. You get all the marks. Oh, sorry, we will be able to improve on our communication skills. I'm being told that the summit students never got to know about the early morning class. We shall overcome. Okay, but nevertheless, you are with us. Now, so part 2 already finished. We go to part 3. Part 3, they want us to give them the explanatory power. So part 3, they want us to give them the explanatory power. So remember, our equation here, if I could write it a little bit up here, is y equals 0.983 plus 0.62 x1 plus 0.587 x2. This is our equation. Now we go to the explanatory power. Ladies and gentlemen, remember that explanatory power, the model which we normally use to ascertain the explanatory power of a regression equation is called coefficient of determination. So they want us to give them the coefficient of determination. The coefficient of determination into brackets r squared. The coefficient of determination into bracket r squared. This is what gives us the explanatory power. Explanatory power. So ladies and gentlemen, listen and listen to me very well. To get this explanatory power, R squared, I realize so many students here are using different equations, but generally to get R squared, we normally take the explained variance in the form of what here? Sum of squares. Explained variance in the form of sum of squares all over total variance. Again, this total variance has to come in the form of what here? Sum of squares. Must come in the form of sum of squares. Oh, students are saying that the camera is not okay. Are you able to see my board? Move the camera kindly. Are you able to see my board very well? Or you want me to touch it a little bit? So they're saying yes, many of them. So let me not touch anything there. Let me not touch anything there. So R squared is explained variance over total variance. So please let us go to the sum of squares. Let us go to the sum of squares. So the sum of squares, what we have here, sum of squares. So sum of squares from the ANOVA. Remember this one, you normally get it from the ANOVA table. So sum of squares, I'm able to see the regression. Sum of squares, I'm able to see regression. Regression are the ones we call explain. These are the ones we call explain. The regression, ladies and gentlemen, these are 29, 0.8. And then we have the error. These are unexplained. These are unexplained. And unexplained, ladies and gentlemen, are the ones we call 100.1, giving us a total that you guys gave me of 3004.9. So this is the total variance. So now, given this sum of squares that we've been able to extract from the ANOVA table, the explained variance here will be 2904.8 over 3004.9. Whatever I get there times 100. What figure am I able to get there? Whatever I get times 100. What figure am I able to get? Somebody is telling me 97%. So 97%, this means a perfect what here? This means a perfect model. 97%, it means, ladies and gentlemen, a model that is very good for purpose of what here? Prediction. It's a model that is very good for purpose of prediction. 97% is excellent. So in terms of explanatory power, in terms of explaining changes of the response variable y, this model is very good. It's only 3%, which can be accounted by this model. 3% is neither here nor there. So they wanted us to give them the explanatory power that I've done. Look at number 4. Number 4, they want us to do something very easy. They want us to test the statistical significance of each predictor variable. Remember, significance tests are also known as what here? Hypothesis tests. Significance tests are also known as hypothesis tests. They're also known as hypothesis tests. And we've got two types of hypothesis tests. We have, ladies and gentlemen, the predictor variables hypothesis test, or the variable hypothesis test, and then we have the whole equation hypothesis. So here they want us to do a variables hypothesis test, which is normally, ladies and gentlemen, done using the t-statistic. We normally do this using the t-statistic. And remember step number 1 of the t-statistic. Step number 1, give us the t-tables value. The t-tables value. I believe now today they must be having that t. It's called a student t-table. It was discovered by a student like yourselves. Student t-table. So the t-tables value, for me to read this t-tables value, what do I need? Number 1, I need the error's degree of freedom. I need the errors dov. The errors degrees of freedom. Is there somebody who is able to see the degrees of freedom of the error term? Degrees of freedom of the error term. Faith, I've not understood your question. Oh, no, the model not being good, eh? Ah, great. Remember, anytime you get R squared, which is less than what here, 50%, R squared, which is less than 50%, this model will give you unsatisfactory forecast. The model will give you unsatisfactory forecast. The model will give you unsatisfactory forecast. The model will give you unsatisfactory forecast. Yeah. If you remember, there's a time I did a prediction for the corona cases when we began. I was able to get the daily rate like that, and I predicted and said that by the end of the month of June, we're to have about how many? I predicted 1.8 million. 1.8 million corona cases, and I did this statistically using SPSS. 1.8 million corona cases. So people came in this case, of course, after me telling me that this is not possible. This thing is devilish. How can you? I told them no. My R squared is very high. Even when I went to Ebru TV, I told them no. My R squared is very high. I can't be wrong. Now the other day, Camry came and told us that we could be having about how many people? 2 million people who are infected with what here? This coronavirus in Kenya. So you can see how close I was because of what here. My R squared was very high. R squared was very high. Okay. So we have here the t tables value. So the error degrees of freedom, they are telling me the errors degrees of freedom, they are 11. And then number 2b, I need this concept of 1 minus alpha over 2. 1 minus alpha over 2. Are you able to see the alpha? Are you able to see the alpha? Alpha, remember alpha is the significance level. Yes, alpha is the significance level. So we have here 1 minus the level of significance, ladies and gentlemen. Level of significance, ladies and gentlemen, here is 0.05 divided by 2. So 1 minus 0.05 divided by 2. Divided by 2. No, Faith. You can in section 4 they used to tell us those things. Section 4 used to for us here we'll be given a computer printer. So here somebody is giving me this figure of 0.975. 0.975. Now please do me a favor. Go to your T tables. You can even download this. Go to your T tables figure. Read up here where you are able to see the T.975. You walk down to where you are able to see a column of V. V stands for degrees of freedom, 11. And then you come here, you read for us a figure that you are able to see there. T.975, T.975. I'm being given great figures there, 2.2, 2.201, one and the same thing. So we have here 2.2. So the T table's value is 2.2. 2.2. Please make sure, I'm so sure some of us don't have these T tables value, the T tables. Please, you can copy our figure, but make sure for this class you have your table and know how to read it. Because T tables value, you must always be required to read figures for me. Yeah, so please ensure that you download this, or I can even send it by the way, that's even my mistake. I should be able to take a good photo of these T tables value. I submit it to you, great students of mine. Now, after that, the next step, number 2, the next step will be to calculate what we call the T ratios or the T calculated figures. So the T calculated figures, ladies and gentlemen, T calculated figures, we say that our T calculated figure, T ratio, equals coefficient all over what is somebody? The standard error. coefficient all over the standard error. Fortunately for us, ladies and gentlemen, we have all these t values being given to us. We have the constant, we have the t ratio for x1, and we have the t ratio for x2. We have all of them, yes. We not calculate them. We will not calculate them. We won't calculate them. We won't calculate them. We won't calculate them, ladies and gentlemen. We won't calculate them, ladies and gentlemen. We already have them. If you look at the parameter estimates table, the constant is 0.34. We have here 2.42, and then lastly we have 2.61. 2.61. In the T table. So Josephine wants us to repeat how to get this figure on the T table. Josephine, I want to believe that you have the T table with you there. So if you have this table with you, you will always be guided. You'll always be having, in this case here, 2 columns there. We have one column up there written T.9 something. One column up there, ladies and gentlemen, where you are able to see a column title of T.975. And then we have another one here going by the name V. V stands for degrees of freedom. So you go down here, you'll be able to see 11. And then, of course, you walk in parallel alongside. So, of course, you stop here. This figure that is at the intersection there is what we call the T what here? Tables value. The T tables value. And remember, there are 2 types of T tables there. There are 2 types of T tables. You're supposed to know how to read both of them because the examiner can bring either 2 tables. I'll be showing you how to read them later. Both of them, I've sent them to you. For now, what do we do? All of us, I know most of us are not even seeing how we get this thing. Just copy this thing here. The T table's value we have is 2.2. Now, could you kindly tell me, compare the 2 between these three figures? Which one in this case here gives us a variable that is significant? A variable that is significant. Remember, significance can only arise, ladies and gentlemen, in situations where our T calculated figure is bigger than the T table. If the figure is not bigger than the T table, then that thing is useless. That thing is useless. So, ladies and gentlemen, in this case here, I can see that x1 and x2 figures are more than 2.2. So meaning that x1 and x2 are what here? They are significant. X1 and x2 are significant, whereas the constant that we have here is not significant enough. The constant that we have here is so small. The constant we have here is so 0.34 is less than what here? 2.2. So the constant that we have here is so small. So in this case here, the constant is not adequate. The constant is not what here? Adequate. So the constant is not adequate. 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 So the question will be, if the constant is not adequate, what should we do? Kill ourselves? Stop our prediction exercise? No. Whenever you have one of these particular variables failing your statistical parameter tests, what you need to do are a few things. For example, you can decide to replace some items in your sample because they're giving you what we call outliers. Or you will increase the sample size. So let's go to the last question. The last question, ladies and gentlemen, is quite an easy one. So the last question, ladies and gentlemen, they want us to carry out a whole equation hypothesis test. The last one, they want us to comment on the statistical significance of the model at 5% significance level. Model. So we have here hypothesis test. We have here hypothesis test. Hypothesis. So we have a hypothesis, test, or whole equation. This one we normally do it using F statistics. We normally do it using F statistics. Like that. Using the F statistics. And very easy. The first thing I will do is to pick the F tables figure. F tables figure will always be given to us. Never even bother to know how to read it. So F tables figure is normally given to us. Normally given to us. Normally given to us. So the F tables figure, ladies and gentlemen, what do we have here? F tables figure. They have told us the F tables figure is 3.98. Thank you and thank you very much. And then number 2, we have the F calculated. We have the F calculated or the F ratio. The F ratio, we have to be at a position of remembering how it is computed. We normally compute it by taking the explained MSS all over the unexplained, all over the unexplained MSS. So explained MSS all over the unexplained MSS. Unfortunately for us, we had already computed this thing. Already we have it. Who can give us an answer? Who can give us an answer? Somebody give us an answer here. Explained MSS, all over unexplained MSS. What we have there? Somebody, we have gotten this figure 159.6. 159.6 like that. 159.6. 159.6. So ladies and gentlemen, you can see the F calculated in comparison to this F tables value. This is like Goliath. It's so big. So it is significant. So you tell us since this is more than 3.98, since it is more than 3.98, ladies and gentlemen, the model is significant. The model is significant for purpose of what here? Prediction. The model is significant for purposes of prediction. The model is very good. The model is very good. So this model overall, generally, the model is good apart from the constant. There is a constant which failed our test. Meaning that as a statistician, now I stand a better chance of producing a model that will predict with a lot of certainty. We predict with a lot of certainty. That will predict with a lot of certainty. Predict with a lot of certainty. The only thing I need to do perhaps to also make this particular constant here to be a bit significant is to increase the sample size. To increase the sample size. Remember, like these models, ladies and gentlemen, of US, the ones that they use to predict presidential candidates, whether they win or not. Those models are very accurate. And they normally use these things that we're showing you here, the R square, etc. Very accurate models. Now, from what I'm able to gather, ladies and gentlemen, most of us are not good in this area. I have to repeat something before I go to your past paper. Before I go to your past papers, please mention illustration there. Before I go to your past papers, mention illustration. So before I go to your past paper, mention there illustration. Illustration. This illustration is basically construction of the ANOVA table. Let me just teach you this. Then it is not relevant for your exams. Construction of ANOVA table. Construction of ANOVA table. So we are given here number of cases. Number of cases 26. Number of cases there are 26. Basically, this is our n. Our n there is 26. That's a short question. There are 3 predictor variables. There are 3 predictor variables. There are three predictor variables. There are three predictor variables. The variance of the response variable. The variance of the response variable. The variance of the response variable. The variance of the response variable equals 14. The variance of the response variable equals 14. And then they have given us coefficient of determination. Coefficient of determination. Coefficient of determination equals 0.9. This is right slowly, 0.9. So they want us that they want us to construct ANOVA table. ANOVA table. They want us to construct ANOVA table. They want us to construct ANOVA table. They want us to construct ANOVA table. Remember, ANOVA table solution must be like this. So we have the source, we have degrees of freedom, we have sum of squares, we have mean, sum of squares, and then we have got F. So I want to give you a minute. We see how far you guys will go in terms of giving us this ANOVA table, constructing the ANOVA table that you are taught in QA section 4. In QA section 4, I want to give you 1 minute to finish doing that. So let's construct this together. So the first thing we need to do is to come and mention the sources. So sources, we have regression, we have error. And then we start with this column of degrees of freedom. So ladies and gentlemen, degrees of freedom for regression. Degrees of freedom for regression are always K. And the K stands for number of predictor variables. So number of predictor variables, like now here, my K will be equal to 3. So meaning that the regression degrees of freedom are 3. They are 3. How about the error? To get the error degrees of freedom, we normally take n minus k minus 1. N minus k minus 1. Error degrees of freedom, we normally take n minus k minus 1. N minus k minus 1. So what is our n? Number of cases here are 26. This is our n. Our n here is 26. So I'll take 26, ladies and gentlemen. 26, ladies and gentlemen, minus this k, which is 3, minus 1. So we have here 26 minus 3 minus 1, giving us error degrees of freedom are what here? 22. 22. And then, ladies and gentlemen, lastly, we have the total errors. How do we get, in this case here, the total degrees of freedom? To get the total degrees of freedom, ladies and gentlemen, total degrees of freedom, we normally talk of n minus 1. Total degrees of freedom, we normally take talk of n minus 1. N minus 1. So n in this case is 26. 26 minus 1, what are we able to get? 20 what here? 25. 25. 25. 25. There's a student saying my camera is bad. Oh, it's constant. Sorry. Constant. So source here, we have regression. We have the error. I know what data is talking about. We can't bring constant here. Constant normally goes to the table, the parameters. We can't bring constant here. Right? So this is in agreement. If you add 3 plus 22, 25. Or if you put n minus 1, you end up getting 25. And that is it. From there, we got the sum of squares. Sum of squares. Now, ladies and gentlemen, these people have given us the variance. They have given us the variance of y. They have given us the variance of y. I want somebody to write for us the formula of variance of y. Write for us the formula of variance of y. 1 minute. Write for us that formula. Variance of y equals what? Somebody. Variance of y equals what? Variance of the response variable. Variance of y equals what? Just write for me very fast. Variance of y will be equal to get variance of y. Anytime you want to get variance of the response variance of y, normally you talk of the total sum of squares. The total sum of squares all over n minus 1. So you talk of total sum of squares. Total sum of squares all over n minus 1. Those formulas you guys are writing there, they are quite great, but those are for quantitative analysis. Even for QA, at the very far end, your lecturer must have summarized these formulas for you. So the variance of y, which is given here, is 14, which will be equal to the total sum of what here? The total sum of squares that we don't know, all over n minus 1, which is here, we found as 25. That is found out as 25. We found out as 25. So could you then kindly give us this total sum of squares? Kindly give us this total sum of squares. Give us this total sum of squares. So we have here the sum of squares. Sum of squares. So if you make total here, so 25 times 14. 25 times 14, what are you able to see, ladies and gentlemen, that 25 times 14 gives us what here? 350. This gives us 350. 350. So the total, please write this in full. This is total sum of squares. Total sum of squares, which you've been able to get here as 350. 350. I don't want to move with speed because if you're saying you don't know these things, then they give you problems when you go to the past papers or past papers. So we want somebody to use whichever way to give me any one of these summations here. Any one of these sum of squares inside there. Just take a minute and give me any one of those SS. Any one of those SS. Giving you a minute. Give me any one of those SS. Look at this. Look at this. I want to get one of these. How will I do this? I know that there is another formula of getting, ladies and gentlemen, there is another formula which makes use of this sum of squares. Basically, this is r squared. If you remember, our r squared will always be equal to explain. The variance in terms of sum of square all over the total variance in terms of sum of square. And the r squared given up there, ladies and gentlemen, if my memory serves me right, the r squared given there is 0.9. The r squared given there is 0.9, which will be equal to the explaining, SS that I don't know, all over the total SS. The total sum of squares is 300, what here? 50. Implying that at the end of the day, my explained SS will be 350. Explained SS will be 350 times 0.9. So this will be 350 times 0.9, which will give us exactly what figure somebody here? 350. So this gives us 350. Don't forget our formula of r squared also makes use of this SS. And you get r squared. We normally take explain the sum of squares all over total sum of squares. So now having gotten these 350, knowing very well that these two must add up to 350, then the balancing figure here will be the errors sum of squares. The error sum of squares. Could you kindly give me this error sum of squares? 350 minus 315 gives me what figure? 35. That gives me 35. Of course, in the ANOVA table, after you give me the SS, the next thing will be for me to average that. The next thing will be for me to come and give you the mean sum of squares. So come here and give us the mean sum of squares. So this will be SS divided by the DOF. SS divided by the degrees of freedom. So you take like 315 divided by the corresponding 3. 315 divided by 3 will give us what figure somebody? 315 divided by 3, that I'm being told, will give us 105. So we have here 105, 105. What about 35 divided by 22? 1.59 or 1.6. 1.59 seems to be popular. 1.59. Ladies and gentlemen, it doesn't end here. Once I get this, I need to come and create a column of F. F should be the last thing. F should be the last thing, but most students have forgotten how to get this F. Most students, I'm so sure, most students have forgotten how to get the formula of getting this F. The formula of getting this F, I'm 100% sure very many students can't remember that formula of getting F. Can't remember that formula of getting F. So remember, F is an unexplained, or rather explained MSS. Explained. So I forgot to tell you that regression is the same as explained. Regression is the same as explained, and then error is the same as what here unexplained. So for F, we are taking the explained MSS divided by unexplained MSS. Explained MSS divided by this. So it's 105 divided by 1.59. Which will give us what figure? Somebody here 66.04 or 66 like that. 66.04. So I hope now that is clear, right? And to imagine that at least now if you're given some statistical data, you'll be able to construct this ANOVA table. Thank you and thank you very much. Thank you and thank you very much. Now let us get out our past papers. We get out our past papers and go straight away to this question. Go straight away to cost estimation and the forecasting. Cost estimation and forecasting. It is chapter 2. So cost estimation and forecasting, chapter 2. Chapter 2. Chapter 2. So there is a time they gave us a learning curve, not learning curve, but a regression. A regression question. I don't have it here. From your past papers, is there anybody who is able to see a computer output regression question? A computer output regression question. Can I repeat the F calculation? F calculation, F calculation, F calculation, ladies and gentlemen. F calculation, F calculation, F calculation should be explained, MSS, all over unexplained MSS. So explained MSS is this one of 105 over 1.59. That's how we're able to get the 66.04. So students are giving me May 2018 years. So May 2018, May 2018, May 2018, May 2018. Question number 2. Go to May 2018, question number 2. And I want to give you guys 5 minutes. 5 minutes. You try your best interpreting that question in accordance to your very best of abilities. May 2018, question number 2. The first thing that they want us to do there is to ascertain the regression equation. Regression equation. I'm so sure that one everybody was able to do it. Regression equation, regression equation. regression equation. Regression equation, that one I'm so sure everyone was able to do it. So regression equation, were they able to crack this one? Were they able to get it right? I'm not seeing so many yeses there. I'm not seeing so many yeses. Regression equation, and to believe that that one, everyone must have gotten it correctly. So it's only Lucy who has it there, who has been able to nail it down. Who has been able to nail it down. Yes, at least I can see another yes. That encourages me. That encourages me. So we are told, ladies and gentlemen, there in this particular past paper of ours, that is May 2018. May 2018, question number 2. May 2018, question number 2. The following data relates to the weekly amount spent on entertainment by households. The annual income of the head of the household and the household size in terms of number of persons, they have given us there. A computer output of the above data. A computer output of the above data using a spreadsheet package was provided as follows. So I can see multiple R. Multiple R, that multiple R, I have to understand it. Multiple R stands for the multiple correlation coefficient. Multiple correlation coefficient. The multiple correlation coefficient. And then we have the R squared. And then we have adjusted R squared. Later already asked you to give me the difference between those two terms. R squared, the normal one, and the adjusted R squared. Then we have the standard error being given there. The standard error being given there for the whole equation. And then we have observations, n is 20. So they have clearly given me the ANOVA table there. And then number 2, I can see the parameter coefficients estimates. Under the coefficients estimates, ladies and gentlemen, under the coefficients estimates, ladies and gentlemen, what do I have there? I have the famous intercept. The famous intercept or constant of which they have given me the coefficient. The coefficient here is minus 4.09, and I'll not write all those things. The coefficient of income, ladies and gentlemen, they have given me is 0.9858. And then we have the size. The size, what we have here? We have 1.7624, like that. So they want me to do something very easy, to give them a regression equation. So our regression equation look like this. My y will be equal to a plus b1x1 plus b2x2. So my y regression equation here will be equal to a, that is negative 4.099. Remember, a is the intercept or the constant. And then the other coefficients have been given. Plus 0.9858 x1 plus 1.7624 x2, like that. x2. And ladies and gentlemen, the moment I have that, that will be good to go. 2 decimal places that is still okay, or we can even decide to write the entire numbers as given. I'm the one who has taken the lazy way. So this one, I'm so sure all of us would have gotten it correct. Ladies and gentlemen, number 2, they want us to give them a statistical analysis of the computer results. How do you interpret the computer results given there? Is this model a powerful model for prediction, or it's a useless model? Ladies and gentlemen, I'll start with the easiest. So interpretation of the computer output. If you'll allow me, I'll delete this. A computation, or rather analysis of computer printout. Analysis of computer printout. Analysis of computer printout. So analysis of computer printout. I will start with the correlation coefficient. The correlation coefficient, what they are calling multiple, basically is for multiple relations. Is for multiple variables. So I can see the computer correlation there is 0.6692, which is the same as 66.92%. Remember, this is R, and R measures the extent. R measures the extent of association. R measures the extent of association between variables. The extent of an association between variables. If you get R, ladies and gentlemen, being exactly equal to 100% relationship, this is what we call perfect positive correlation. Perfect positive correlation. Now, for advanced management accounting, we prefer perfect relationships as perfect models of estimation, perfect relationships. So if I have, ladies and gentlemen, sales here versus, for example, something like advertising. Of course, the two are related. I expect the more I advertise, the more I should be able to sell. If I can get an association between the two being 100%, then I'll put all my resources in advertisement. Because every coin that I put in advertisement, I'll always get results in form of what you say, sales. So ladies and gentlemen, whenever we have our R, remember in this case here the ranges of our R. So when R falls between 0 all the way but less than 50%, this is a poor relationship, poor association, poor relationship. Whenever our R falls between 50% all the way, but of course less than 75%, this is basically an average relationship. Average. And ladies and gentlemen, anything that is more than 75% all the way up to 100% indicates what here? Excellence. So this automatically will be an excellent relationship. So ladies and gentlemen, when you see here 66.92 falls where? Falls here. So what they are telling us is that 66 or rather at 6.92%, which falls here, it means that the variables of this model have an average association. They have an average association. It's a lukewarm relationship. You need to do further statistical tests for you to be able to see that there is, for you to be able to see that really there is what we call causation between, like now sales and advertising. So don't rely on this model so much, because the relationship as given by the computer correlation is average. Is average. 66.92 is here. That's quite a good interpretation. Now, ladies and gentlemen, from there, after correlation, straight away I'll go to coefficient of determination. I will go to coefficient of what here? Determination. Coefficient of determination. We have here coefficient of determination. So coefficient of determination is R squared. Coefficient of determination is R what here? R squared. Now, ladies and gentlemen, here they have given us two R squared. There are two of them. We have the normal R squared and we have here the adjusted R squared. 0.44, 78, 17. That is a normal. And then we have our adjusted R squared. Adjusted R squared, which is 0.38, 0.38, 28, 55. So between the two, ladies and gentlemen, of course, I will only use one. Which one do you think is the effective one? Which one should we use to appraise a regression model? Which one should we use to appraise a regression model? Which one should we use to appraise a regression model? Normal, though it is below 50% normal, we should never use normal. We should always use the adjusted, and I'll be able to explain why. Now, you see, luckily, you guys are not required to even memorize the formula of getting adjusted R squared. However, just out of curiosity, if I wanted to get this adjusted R squared, what should I do? I'll come on top of 1 minus the normal R squared, then multiply this with n minus 1. And then I'll come and, ladies and gentlemen, not this one. It's supposed to be 1 minus. Now we have here 1 minus R squared, multiplied by n minus 1, and then we have n minus k minus 1. N minus k minus what here, somebody? Minus 1. N minus k 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 minus 1. Anytime they want us, ladies and gentlemen, to give them R squared, R squared, R squared, always. This is the formula you should be thinking about, adjusted R squared. Adjusted R squared. There's nobody who will ask you how to calculate this. This one here we're being asked. We are being asked here, we're being asked in section 4. Nobody. But what you're supposed to know, ladies and gentlemen, is that this R squared takes into consideration the number of, we adjust this normal R squared to fit in the main number of predictor variables that we have. So when it comes to appraising of a model, we don't use this normal R squared. We always use, ladies and gentlemen, we always listen to me, we always make use of what here, this adjusted R squared is the effective one. And this adjusted R squared translates to what? 38.2855%. Which, as somebody noted there, is less than what here, 50%. Meaning that this is a very poor model. A very poor model. Hata ukiwa primary school, ukipata 38, najua uko ipata, sasa huwezi uko ukielewa nini, najua uko ipata. Lakini ukiwa primary school, unakuwa unapata namba zako, kwa sababu utakuwa ni very poor. Go home and come with your parent, go and give language from you. So this is a very poor model. It's a very poor model on the basis of R squared. Adjusted. Now, ladies and gentlemen, the next thing that I will do here is to make use of the F statistic. Go and make use of the F statistic, and I want to give you 1 minute. Make use of the F statistic. 1 minute. Tell me where the model is good. We are basically appraising a model. We are appraising a model. So could you kindly make use of the time that I'm giving you to give me a statement on this? A very good student here by the name, I can't see the name very well, Evans, Ivo Mararo, yeah, saying that F value is significant because it is larger than the F table's value. Yeah, since 6.89 gyres is bigger than that, the model is significant. And really, that is what you're supposed to be talking about. So they are telling me something very good here, that the F calculated, ladies and gentlemen, the F calculated The F calculated here from the question is 6 point what here somebody? 6.89, 6.89, whatever. And then of course we have in this case here the F tables value as given in that column of significance F, which is very small, so 0.0064. Ladies and gentlemen, this 6.89 is our calculated parameter, which should always be bigger than the F tables value, always bigger than the F tables value for us to be able to say that this model is significant. So the F of the model is 6.89, which is more than this, meaning that the model is what here? Significant. So basically, it's like I'm doing a hypothesis. So I've been able to finish the one of F. Straight away now I'll go to the one of T. Now please embark on the one of T. And this formula, I would expect you, great students of mine, to try this formula later, right? This formula, just try it later to get this. You can even do it right now. It doesn't have really anything much. So we have here, we are talking about 1 minus, into brackets here, 1 minus the normal R square. The normal R square is 0.447870 multiplied by n minus 1. They told us that our sample size observations were 20. So 20 minus 1 gives us 19. All over N is 20, K number of variables. Predictor variables were 2. Predictor variables here were 2. So we talk of 20 minus 2 minus 1. So then at the end of the day, what shall we end up having, ladies and gentlemen? This will be equal to 1 minus, I don't know whether there's anybody who will be able to give us this figure. We do this figure separately. So 1 minus this, whatever I get, times 19, divided by 17. So 1 minus that figure, check whether they give you something close to this adjusted R squared. Yeah, I can see somebody who has already gotten an answer, 0.38. Exactly. So you need to practice. Now we are doing a hypothesis of which ones here now? The variables. I want to appraise and say whether the model is good on the basis of the variables. So I need two things here. I need my variables. So I have my variables. My variables here, we have the constant. Which is the intercept. And then I have one for income. And then lastly, I have one for size. So ladies and gentlemen, if you look at this keenly, what I'm interested in are two things. I am interested in the T calculated. So I want someone to give me the T calculated here. T calculated. How do I get the T calculated? To get the T calculated, you normally take the coefficient given divided by the error. Take the coefficient given divided by the error. Give me the first T calculated. The first T calculated. I know to give, just calculate. Somebody is giving me, no, nobody is giving me anything. Take the coefficient given there, divided by the standard error. Tell me what we have, somebody here. These guys are tired. These guys are tired. These guys are tired. The T calculated. Is there somebody who is able to see the intercept of negative 4.099 divided by the corresponding standard error of 5.5 something? Yeah, they're giving me a figure of minus 0.73. Thank you and thank you very much. The one given there. The T calculated is minus 0.73. How about income? The one of income, now you can copy the figures given there. The one of income, I can see it's 3.14. You can as well do it because the more you do it, the more you understand. So 3.14. The next one is 1.03. The next one is 1.03. Thank you very much. So ladies and gentlemen, for me to be able to really appraise these variables, I need the T tables value. I need the T tables, so I can take this as number one. So I need the T tables value. So we have here T tables value, the T tables value, the T tables value, which I would want you guys now to read for me. Kindly read for me. I've read for you these things separately. So kindly read for me this one. Kindly read for me this one. The T tables value will be equal to what? The T tables value will be equal to what? The T tables value will be equal to, for those ones who have tables, for the ones who have tables, please give us the T tables value. Waiting, give us the T tables value. So remember that for us, ladies and gentlemen, to be able to read the T tables value, we need two things. Number one, we need alpha, level of significance. The level of significance here has not been given expressly, but you can see some things being given there, 95% confidence intervals. Whenever confidence intervals are given, you can easily get the level of significance. So in this case, the level of significance is 5%. And remember that 5% is our default. Whenever level of significance is not given, always assume it is what here? 5%. So come and give us, ladies and gentlemen, here, give us the 1 minus alpha over 2. So this will be 1 minus 0.05 over 2, which will end up giving us what figure, somebody here? 1 minus alpha over 2 will end up giving us what figure? Will end up giving us what figure? Somebody, I don't have my calculator. Is it 0.975? Thank you very much. Now that is a very important parameter. Number two, we need the error degrees of freedom. These error degrees of freedom at times the examiner may not give them to you directly. So all you need to do is to remember the formula is n minus k minus 1. N minus k minus 1. So our n here, they gave us 20, k we have got 2, minus 1 like that. So then this will give us what here, 17. So now you go to that table of hours. That table of hours, 0.975. 0.975, ladies and gentlemen, all the way. So if you do it that way, you'll be able to give us what we call T critical. T critical, which is 2.11. And remember, ladies and gentlemen, if our T critical here is 2.11, our variables can only pass the test if they are significantly bigger than this 2.11. Anything that is bigger than this becomes what here becomes significant. So you can see 3.14, ladies and gentlemen, is the only one which will be able to pass the test. So this model has got only one significant variable. This model has only one significant variable, which is what here? Income. which is income, and therefore the model is a bad one. The model is poor. Because I mean, we should be having as many many variables being what is significant. Many variables being significant. We'll be having many variables being what here being significant. Many variables being significant, yes. Right? So it's only one that is passing this test of goodness. They're called test of goodness. Test of goodness. So if it's only one out of three, then this model is useless. If you use it, it will cheat you that this person will become your president, and it doesn't end up becoming your president. It cheats you. Now, this question, they did something very interesting. I wish they could give me a chance of testing advanced MA this time around. These are the kind of questions that you put there. Yeah, you put this kind of questions there. However easy they are, so many students will return their scripts and marks. And remember, as an examiner, you always have an objective of ensuring that it's less than 2,000 students who will pass in this paper. Right? So they gave us another free marker there for p-value. 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 This is the probability of success. Probability of success is our P. And this is very easy to use it to interpret. This is very easy to use this to interpret because for us to say that a model is significant, a model becomes significant when P is greater or equal to the level of significance. When P is greater or equal to the level of significance. Level of significance, P. So remember the level of significance here. So P should be greater or equal to 0.05. Just that. And you can see the P value is given. You can see the P value is given, ladies and gentlemen. You can see like intercept. You can see P calculated given. The P calculated given here, like the intercept. What do we have here for the intercept? Like the intercept, ladies and gentlemen, I can see straight away we have for the intercept, I can see the p-value is 0.47. So this is 0.47. Ladies and gentlemen, we go to the next one. Next one is 0.00. Next one, which is x1, is 0.00. Very useless one. 0.0059. 0.0059. X2, which is a size, I can see 0.3, 0.31, 0.31. 0.31, 0.318, whichever. So, ladies and gentlemen, at least the intercept is good because the intercept is more than 0.05. So, intercept has passed the goodness test. So, intercept is good. Intercept is good. How about this is bad? Bad because you can see this figure is less than. This is good. This is good. It has passed the goodness of test of goodness. Good. So in terms of the whole model, we have, of course, two of them being good. Nevertheless, one of the variables is poor. That's the combination of the key. One of the variables is insignificant. The model has a variable that is insignificant on the basis of the p-value. 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 So that is it, ladies and gentlemen. The next one that I would want us to tackle there. I mean, in this question, how many marks would have you gotten? If you are doing this in an exam, how many marks would have you gotten in total? Can you be very honest with us? Yeah, K is 2 because of the number of predictor variables. Income and what year size, there are only two. Yeah. How many in this case here would have you gotten? So we have 𝐉𝐨𝐢𝐧, Christian. 5 only, like that. Quite good. 6, 4 marks. Okay. 2 marks. But I believe that once I do just one more question on this area, all of us will be very comfortable. All of us will be very comfortable. So look at there, outline 3 factors that might hinder the interpretation of the results given above. Now, ladies and gentlemen, basically they haven't given us sufficient information. Like number 1, we don't have information to use to assess the model, for what here? Multi-collinearity. So we don't have, ladies and gentlemen, what we call the correlation matrix. Which we should be able to use. You see, we have y, x1, x2. We have y, x1, x2. Like that. So remember, here they should come and give us variables. Here we have 1, 100%. And then, for example, we have 0.8, whatever. Ladies and gentlemen, this multicollinearity is a bad thing. All the predictor variables are supposed to be relating with what? They're supposed to be relating with y. All the predictor variables are supposed to be relating with y. But we should never have a situation where the predictor variables are relating themselves significantly. If they relate like that, they will be having many relationships in one model. So we don't have information that will be able to help us, ladies and gentlemen, to assess for what here? For multi-collinearity. Right? Ladies and gentlemen, number 2, also we don't have, there's no information. No information for assessment or auto stroke serial correlation. There is no information. They haven't given us what we call the Durbin-Watson. They haven't given us, so there is no Durbin-Watson. It's called the DW. Durbin-Watson statistic has not been given. Durbin-Watson statistic has not been given. Remember this concept of serial stroke autocorrelation. Like you have variables that you are assessing here. Yeah, this relating to this, this relating to this. And then you have the same variable relating, for example, with time. As time increases like sales, as time in this case here goes by, we have the thing going up. So we'll be having what we call automatic relationships, which are normally measured using the Durbin-Watson statistic, the concept of 1, 2, 3. This is something again that I should be able to take you through. It needs like 30 minutes or so for me to explain this very well. For now, know that we don't have in this case here any information which will be able to, ladies and gentlemen, number three, the question doesn't make reference to plausible relationships. Doesn't make reference to plausible doesn't make reference to plausible relationships here. So plausibility, does the relationship that we have, do they make sense? Ladies and gentlemen, there are relationships in this case here that don't make sense at all in statistics. If for instance, ladies and gentlemen, there is somebody saying camera has a problem. Camera, okay. So for instance, I've even finished. So for instance, if you have this kind of a relationship, effectiveness of an accountant, versus the size of the toe, versus the size of the toe. So somebody has done research here, and they came up with some conclusion that the bigger the toe of an accountant is, the more effective this particular accountant will be at their workplace. This is a useless relationship. And that is why statistics really needs to also to go a step further and tell us that here we have this and this variable, they need to show that connection. How plausible are they? How related are they? Ladies and gentlemen, I'm taking this opportunity to thank you so much for having attended today's lesson. Indeed, it has been a pleasure hosting you. I want to believe that you have gained something out of this. I want to believe it has not been a waste. Great. So don't forget to buy our books, study text, revision kits. Please, that is the only way that you can promote your mwalimu here, right? And also remember, we have a get-together today at 2 p.m. in the name of Advanced Financial Management. Advanced Financial Management, 2 p.m. I'll be looking at what we call cost of capital revision, cost of capital. Please, I would really beg you guys to keep time. These Zoom classes are good, but I'm realizing that many students are not really understood the concept of keeping, because the moment you come in a little bit late, you'll always be having so many questions to ask. Why don't you just be on time at exactly 2? I was going to 10 at exactly 2. Hata mniambie mwalimu nikichelewa kuja by 2. Kama nitachelewa, usiniadmit. Because the cost of capital is a major topic. It's a major topic. If you lose out on the first concept, you 10 minutes, cost of equity, flotation cost. If you lose out on that, you get lost in the entire 2 hours. A waste of what here, a waste of time. So I look forward here to hosting you great guys at exactly 2 p.m. The summit people you need to talk to, the other students that you have in your WhatsApp groups, so that they can join us if they will be having time. Otherwise, thank you very much. God bless you. For those of you who want to go to church, please, this is the right time. Go to church and pray for all of us. Thank you. So wanasema rudia hapo kwa Darwin Watson. You see, we say, and the Darwin Watson statistic is that there is no information that will be able to guide us to, ladies and gentlemen, that will be able to guide us to test serial stroke what we call out or what here correlation. There is no information which will be able to guide us. They don't have. We don't have what we call the Darwin Watson statistic. Darwin Watson statistic is not given. The Darwin Watson statistic is not given. So thank you very much. I have to take a rest of about 30 minutes before my next class. See you, and please continue marketing our program. This is a good program where people come and just pay 100 more. 100 shillings, like for this particular class. This is worth it. Thank you.